Hello and welcome. We're still here at the IGF UAE 2024 and a plethora of speakers really joining us from different facets, right from corporates, venture capitalists, private equity players and more. And one such investor is right here with me. I'm talking about Mr. Prashant Prakash of Accel India. Prashant, hi, thanks so much for making time for us.
Great to be here, Anisha. Yeah.
I wanted to begin by asking you, how's the deal-making environment in the country right now? Because till a few months ago, we were talking about that funding winter of sorts. Has it eased out a bit?
100%. I think this year has been very different, and not only for early stage, mid stage, late stage, pre-IPO. Across the spectrum, we have seen a lot more activity. I mean, one data point is if you look at quarter by quarter, a quarter between last year and this year, almost 100% increase. So we had almost 3.4 billion invested this most recent quarter. And the previous year, it was like 1.3 or 1.4. And this is not, like I said, any one stage, multi-stages. So I think the ecosystem seems to have warmed up or thawed across the board.
But what's the reason for that? Is it just that it's becoming more attractive in the sense that some of the businesses are getting right for investment, or what really?
I think it's multidimensional. I think valuations are moderated. And that always, gets the right supply-demand things in action. The second facet would be the IPO market,
yes,
and which gets a lot of Indian capital to crowd in on tactical and opportunistic situations, right? That's number two. And number three, I would say entrepreneurs have also started to learn a lot from the last vintage and have started to focus on, the right things, right? The right moderate growth, but profitable growth. Also starting to understand India better.
Yes.
So entrepreneurs were doing a lot of extrapolation from global markets to Indian market, and everybody understands India is not one India, many Indias, and India is also a country where the value seeking is at a different level,
yes,
across
true.
the board. I think for new age entrepreneurs, the traditional Indian entrepreneurs always knew it, but I think
the
newer ones took a little bit of time, and they have done it, and that's kudos to the entrepreneurs, right? They've just in 2 years really smartened up and kind of oriented or refashioned their strategies to make it work for the current environment, and then capital just follows.
Yeah, true. And you guys, of course, play a part in guiding them towards that. But you talked about valuation as well as IPOs, right? You talked about how valuation has moderated, but then that limits the opportunity for exits as well, right? Because of late we have seen, whether it was Swiggy, whether it's others, the listing has been a bit more tempered. Is that something which might make you time your exits in a different fashion?
No, I think even there, if you look at the gurus in the market who have IPO'd in the last 20, 30 years, I mean, we are all very new to this market. They all believe that you need to compound once you go public.
Fair.
Not time it and not price it optimally or price it to perfection, right, when you IPO. I think that's the learning. I think if you see some of the early startup IPOs, they failed not because I think they priced
didn't leave value on the table for investors.
Exactly, you price it to perfection, things go wrong, everybody is unhappy, right? So I think this is again another learning which I think will make everybody more happy, and everybody makes money.
Oh, well, yes, market is the best teacher, isn't it,
yes,
right?
Yes.
But, talk to me about which are the areas where you are seeing increased funding activity, because, of course, there was that fintech wave that had come by. It's all about Gen AI and digital and all of that.
Yeah.
Is that still the focus area, or is it turning a lot into manufacturing as well as other verticals?
Yeah, so, there is the traditional consumer space, right? And consumer not online only anymore. Everything is omni-channel, online, offline, everything, right? So you've seen large industries such as pharma, digital pharma, still not taken, right? You've seen, TrueMeds and some of the other companies that Accel has recently been investing in. And I think there's a lot of brand spaces which not necessarily the FMCG type of brand spaces, but spaces which are kind of large, like the bags and the luggage, those kinds of spaces. So there are still a few brand spaces and consumer spaces. B2B, I think, is still a lot of opportunities in specialty precision manufacturing from India. So it's not only engineering type, but it's also science-driven manufacturing, where you're basically taking advantage of the global diversification of supply chains. It took some time for, again, Indian entrepreneurs who have traditionally been not used to manufacturing. They're more used to the softer businesses, not the heavy businesses. But I think they're kind of getting that act together as well, that the new age manufacturing businesses will have AI, will have software, will have a lot of science, will have precision engineering. And I think our entrepreneurs are smart enough and are well positioned to bring all of them together, because that's the type of manufacturing you want from India. You want the next gen high tech, not just
the value added bit.
The value added, not just the assembly type of manufacturing, right? And I think India has enough of science, enough of engineering, enough of software, and enough of traditional manufacturing ecosystem, right? Because we have been in auto, global auto player. There are many the global pharma player, right? So I think all these are, my own prediction is that the new manufacturing phase for India, the high-tech, IP-led precision manufacturing in chemicals, in aerospace, in space, in defense, across the board, could be a 200-300 billion opportunity over the next 5 to 10 years, almost as big as our IT sector, right? So very excited. Of course, it's early days.
Yeah.
But these are all not only for India, but for the rest of the world. You get critical mass in India. You make sure that the technology is state of the art, and then the world is the market.
Yeah, because as it is with the China plus one and Europe plus one opportunities coming in, the opportunities there, you just need to tap into
correct.
it.
So that was everybody knew the opportunity. It's easy to say, but I think it's the funds that need to get oriented. It's the entrepreneurs that need to get prepared, right? And the ecosystem needs to build up.
Yeah.
I think all these three aspects are coming together. So very exciting times.
And last question before I let you go, what kind of activity we should expect from Accel India this year? In the sense, are you well funded after your last round? Are you looking at raising more? What kind of deployment plans you have of late?
So every 3 years we constantly raise new funds. So we are in
towards the fagger end, or you're at the...
No, we will get into a new cycle now.
Perfect.
From the next year. And so which will mean that we'll have a lot of dry powder. And we typically do 18 investments every year. So across early and seed, and that's been our pace for the last 15 years. And we'll consistently continue to do that.
Okay, all the best for that deal making. Thanks so much for making time and speaking with us
Thank
today.
you for having me here. Thank you.